fascinating area right now. So our last panel is on conservation easement. And actually, I don't know if you've read it, but there's an article on Real Clear Politics today talking about conservation easements and tax policy. So if you guys have read it, I'd love to have a discussion about that article. If not, I'm not sure, but please, we've got Dana Main and Jill Dunn. We've done a lot of stuff on conservation easement, especially out of Georgia and the Carolinas. Please introduce yourselves.
Jill, do you want to start?
I will. Thanks, Dana, and thanks, Marty. My name is Jill Dunn, and I am the co-chair of the commercial litigation practice at Freeman Matheson Gary. My practice involves everything from real estate disputes, easement issues, lease disputes, and all the way to things like shareholder derivative actions. So I run the gamut of any sort of commercial matter. And I work with Dana out of our Atlanta office. Dana, why don't you go ahead and introduce yourself, and then I'll start the panel.
Sure. And then but before I introduce myself, I'll have to comment that I have not read the article today, Marty. So Jill, if you have not, then I think we're going to go with the other that he was referring to. But there's been a lot written in the last 2 weeks, or certainly since August 25th. I'm Dana Main. I am a partner in our Atlanta office, and I run our firm's section on professional liability and all errors and omissions types of matters. I represent lawyers, accountants, any professional basically who is out there, anyone who's licensed, other than I do not handle med mal doctors who are licensed, but I handle just about every other type of professional who is licensed. And in my practice, the issue of conservation easements, it has come up often, and I think we're just at the tip of the iceberg, so to speak, with that. So Jill, if you want to get us started.
Yes, I'm going to start. I don't know how much everyone knows about conservation easements and sort of the syndication issue in particular. So we thought it would be helpful just to spend a few minutes just giving a background of what these are and how this situation came about. And essentially, conservation easements have been around for a long time, and what they are is it's a situation where a land conservation organization or a land trust or a local government will receive through purchase or donation an interest in a piece of land, and that interest will contain a restriction that basically constrains the owner's ability to develop the land in order to conserve for conservation purposes. So for an environmental purpose. And it's an agreement between the individual property owner and the land trust or the government. And these have gotten a lot of attention because of the tax deductions and implications that are associated with them. And just briefly, I mean, we could spend hours delving into the tax issues associated with these, but at a very high level, donors of the conservation easements receive a tax deduction, and the amount of the deduction is equal to the value of the donation. And if you're curious, that's section 170H of the IRS code if you can't sleep tonight and want to look at that further. The value is the difference between the fair market value of the property before and after the easement is given. So what that means is that a piece of property would be purchased, it would be appraised by a private appraiser, of course, at its highest and best use, and then the value, a separate value if the owner agreed to restrict the property for conservation purposes. And the difference between those two values is the amount of the deduction. And all of that has been, the deduction portion of this and the tax implications, that has all been in the tax code for some time. What has happened in recent years, really looking back, starting to come into prominence and popularity around the time of the real estate crash earlier in the 2000s, was this idea of syndication. And what that does is allows individuals to purchase an ownership interest in an LLC that makes the donation. And the tax deduction is then supposed to flow back to these investors. And in the syndication process, you've got, there are several players who profit, and those are the people who organize the LLCs. You've got promoters who sort of make the arrangements and facilitate all of this and essentially promote the tax savings vehicles. That has gotten a lot of scrutiny in recent years because of some of the abuses that have been alleged to have come out of this whole process. And you've got organizations like the Land Trust Alliance, which has developed, and that is currently the strongest advocate of the tax break scenario, and it's now the chief opponent of the syndicated easement process. And I was just looking up this organization online earlier, and it's, you know, the website is just, it's full of information and very well done, and there are all sorts of, you know, what you can do to help. It's issues and action. It's a very you know, well put together website. But I thought it was interesting that it remarked that all of the member land trusts of this alliance are required to adopt, sign, and commit to what's called the land trust standards and practices. And I glanced through those, and it's a very extensive list of standards and requirements that are basically a set of guidelines for the responsible operation of a land trust. And one of those is that any alliance member land trust has to affirmatively refuse to participate in a tax shelter transaction, like one of these syndicates. So just interesting how that organization has developed. You know, but there's coming to be this this conflict between the land trust and you know, the syndicators. And the issue is really coming to a head because the land trust is starting to fear that the syndicators are giving them a bad name and detracting from what is they perceive to be the overarching conservation purpose of all of this, which is to protect the land and protect the environment for environmental gains. And up until recently, and Dana's going to talk more about this, but up until recently, really the only you know, so-called enforcement mechanism for these has been through the IRS, and it's really been through the use of audits. And that has really proven to be sort of ineffective for investigating the syndicates and taking any action against them or on this issue, just because of the slowness of that process. There wasn't really any other mechanism until fairly recently for these sorts of vehicles to be scrutinized or to be looked at closer. But that has changed, and as we've seen, just as Dana and Marty mentioned at the very beginning of this presentation, it's all, you know, happened. A lot has happened in the past several weeks. That has changed, and there's been heightened levels of investigation and scrutiny that are starting to take place. So Dana's going to talk a little bit about why that might be and some of the new attention that these are getting, and some of the new scrutiny, and also some of the litigation that is being spawned by all of this.
Thank you, Jill, for that overview. And I was looking through my notes to see the number, and just one of the reasons why this whole issue has gotten so much scrutiny is, according to the Brookings Institution, the economists, the donations have cost, depending on your perspective, either saved taxpayers or cost the U.S. Treasury between $1.2 billion and $2.1 billion of tax revenue in 2016. So we are talking about a lot of money, a lot of tax savings, or money that some would say belongs to the government. So it's a significant issue. If you have not seen these in your part of the world, and I say the United States, anywhere you have a land trust, you probably have these. They just, right now, the epicenter, so to speak, is the Southeast. And there's some who believe that it was started, and there are a couple individuals in Georgia, which is where Jill and I sit at the moment. And they are prolific here in Georgia. There was a congressional oversight committee report that came out that really has spurred a lot of the press that has come out recently. But that report came out on August 25th. It is, and in that report, they focused on, as examples and poster children, so to speak, Alabama, Florida, South Carolina, and Georgia are the main areas right now where these tax schemes, some would say, have been more prolific. So they are out there. Most of the time there has been a legitimate land transaction. A piece of that property right has been turned over to a land trust, to a qualified land trust. It serves the purpose of conserving forever and ever uses of the property. And in that regard, it has been a booming success to preserve for our children, our grandchildren, for a really long time, these properties. But what it has, the IRS does not like, and the federal government does not like, is any company, any partnership that is set up solely for the purpose of obtaining a tax shelter. And that the sham entity doctrine is what it has been coined in common law. And what that says is, if there is a company that does not serve a purpose that's legitimate other than to obtain a tax benefit for its owners, then it's considered to be a sham entity and the government can disregard it. What is happening now is there have been more than 80 tax cases. Somewhere in my notes I have the exact number. But there have been, and it's over 80% of every single conservation deduction company, any LLC that has donated land that has owners, multiple owners. Over 80% of those have been audited, and those deductions have been disallowed either completely or significantly, and sufficient that then the LLC or the partnership has gone and filed a tax court matter. And so in that regard, there have been several that have already gotten opinions. I think that everybody who is in this field at all will be shocked if there is a tax court opinion that comes out in favor of the taxpayer. They all seem to be going in one direction, which is in support of the position that the IRS has taken. I have heard that there is one that has been appealed to the circuit court. I have not seen that yet, and we're waiting to see what happens. That will set to rest what I think, once we get these circuit court opinions, we'll find out what the government is going to be able to do. And what has happened is that the government, somewhere in the beginning, towards the beginning of summer, sent out correspondence to a significant number of taxpayers who have taken this deduction and said, come in, now is your time to settle with us. You get the best deal that you're ever going to get now. So there are several investors who are currently negotiating with the IRS to deal with this particular tax deduction, I'll say. And Then there are civil cases that are pending. There are two right now that are in the Northern District of Georgia. There are two, they were filed as proposed class actions. They have not been certified as class actions. And in full disclosure, we are representing parties in both of those lawsuits. But in those with one of the key questions is going to be whether these transactions, so to speak, are considered to be securities. There is law that's in favor of that finding, and there is law that is against it. So we will have to wait and see what the court does with that. But we are talking about a lot of money individually and collectively out there. Hopefully for the individuals who invested in these, that they are qualified such that as they have pledged, they took the risk and they understood what they were doing. But in that regard, they are suing the lawyers who helped create these programs, we'll say, the lawyers who advised, any lawyer who consulted. They are suing the accountants, an accountant who was given one of these options and maybe presented an option, one of 20 tax saving options to the clients. They're suing them. They're suing the accountants who put together the deal. They're suing there's a player called a promoter. There is someone who has gotten this idea together and creates the LLC, finds the land, etc. They're suing all of the promoters, and it is on and on and on. Appraisers. I would say that if there is one professional who is at the target in terms of the IRS criticism, it would be the appraisers, because allegedly the government believes that the appraisers have created overly inflated values for the property so that then the tax deduction can be greater. So in most cases, these promoters were saying that you get at least, a 2-to-1 return on your purchase in the LLC, which we all think would be fabulous, but that might fall under there's no free lunch aspect of it. But anyway, so that is what we're waiting for. We're waiting to see what happens in those civil actions. I will say that the Department of Justice is going after, they're bringing their own civil actions, but they bring quasi-criminal actions, and they have started going after some of the appraisers and some of the promoters directly. So there is one such suit that is pending right now under one of the more prolific promoters and in some of the sub-professionals. So we'll see what happens with that. So it is an area, I believe, that the IRS now has gotten people to, I don't know if there are any others. I know that there are professionals who have declined to participate in them anymore. So I think that is somewhat at an end. From a conservation perspective, I certainly hope that people continue to take advantage of that incentive. One of the reasons, to follow up and to conclude, one of the reasons that the Land Trust Alliance has come out very, very strongly against these, the syndicated companies, syndicated conservation easements, is because it did create a real danger that the Congress was just going to throw up their hands and say, this is so out of control that we have to get rid of the whole tax deduction. And for land trusts, that it would be a death knell. And so it was, while they certainly benefited from this, from the incentive for people to donate and to join these companies, the fact that that incentive, tax incentive, is there to begin with, is what has preserved so much land for us. And we know that some of our federal land is going away. Some of our federally protected land that belongs to the government is being used for other purposes. And it just makes that private donation and the private conservation all that more important. So I think we're certainly at a turning point with that particular tax vehicle, I will say, and we'll have to see what the next chapter brings when some of these lawsuits start moving along. So I don't know, are there any questions? Jill, can we see any questions on?
I can't see any, but I actually have one for you.
I just want to make a comment. So so what you covered is actually what's in the article.
Oh, well,
it
good.
summarizes it, and it talks about several Silicon Valley people who have bought these conservation easements, and now they've been handed, back bills by the IRS for buying syndications of the easements, number one. And then number two, it talks about this lawsuit against 20, dealers in the space. So that you were just talking about. So it's real fascinating stuff.
So it is that the tax penalty is significant because some of the transactions that are being attacked now go back to 2010. I mean, you end up, and I don't do tax law, so I don't even begin to understand how the government can go back and tag you for underpayment of taxes that are 10 years old, but apparently they can. And then you have the penalty plus the back tax plus the interest. So they are significant. So Jill, yes, you had a question.
I was just going to ask you, I was just curious, the DOJ, the quasi-criminal investigations, have any of those that you've seen at this point extended to the lawyers and the accountants and sort of the people in just the advisory capacities here?
No.
Okay.
I have not, I'm not saying it doesn't exist, but I have not seen that. It is more on the business side. It is the promoters, the people who have put together the deal. And and then obviously the folks who put together the deals received payment for compensation for the work that they did, and I think that that's some of what the government's going after. I'm not sure, but no, they have not focused on the professionals, on the lawyers or the accountants at this point. Okay, Marty, I think we might be done if we can't see questions.
Well, that's really fantastic. Listen, it's a fascinating topic. And we've known about it for many years. I mean, we've done events for years in Atlanta and in the Carolinas, and we know it's been a topic of conversation for many people. So it's very intriguing. And this is not the first tax program, so to speak, to be challenged by the IRS or tax opinion, and it won't be the last.
Yep.
Well, and in my little soapbox, I will say that it is a vehicle, it is out there, and if somebody doesn't like it, they should change the law. As opposed to, it is most of the deals I've seen that have been put together are following the technical letter of the law. It's just that, the law was written in such a way that allowed this. So anyway,
what happens is that people write these laws and they expect it to be a very small minority of people that do it. And then it becomes systematized and boom, that's when people crack down and the law changes. So, it seems to be something that happens over and over again.
And they changed the rules without changing the law. And I think that has been what has been difficult, I think, with a lot of people right now. But again, there's no doubt no question whatsoever about where the IRS is at this point. No one gets to say they didn't know.
Fantastic. Great job, and I really wanted to thank Freeman Mathis and Gary for hosting us in Boston today. We had great turnout. We had a lot of venture capitalists besides the family offices online today, looking at the different deals that were being promoted. I want to thank the great real estate panel that we had and so many of the other panels and speakers that we had today. You know, so hopefully we'll be seeing you when we do our online Atlanta event. And, you know, looking forward to that's going to be, I think, October 21st. We're going to be at Atlantic Station somewhere. And other than that, again, I want to thank Freeman Mathis, and I want to particularly thank Mike Berwick for helping us put this all together. So thanks so much, guys, and we'll see you at the next one. Thanks.
Thank you.